It's summer 2025 and the Florida real estate market has definitely shifted. But don't get too comfortable. It might not be the new normal. I'm Jeff O'Leary, the Village Guru, and welcome to the July 2025 Sarasota and Manatee County real estate market update. In this video, we're going to break down the latest numbers for Sarasota and Manatee County here on the Gulf Coast and also identify key areas of opportunity for buyers and sellers. We'll also cut through all the noise going on right now in the news and focus down to the key stories that are affecting the real estate market and why it can change fast. And finally, we're going to analyze some key metrics to get a better idea of where this market may be headed in the near future. Now, if you haven't already done so, be sure to subscribe to this channel so you don't miss any other updates. And as always, if you have any questions about real estate, feel free to call or email me. Now, having said that, let's get on with the video. Well, summer is here in Florida and it is hot. And before we dive in, I just want to take a moment to wish you a happy Independence Day. I hope you take some time to enjoy it with friends and family, get recharged because it's going to be a wild second half of 2025. Now let's take a look at what the latest statistics from the Realtors Association of Sarasota and Manatee are telling us. Now, in general, the market has been slower. It's taking longer for homes to sell. Prices have come down a bit and buyers have way more choice. Now, having said that, not every area is reacting the same. So let's break it down by housing type and county to get a better idea. So first off, we have single family homes in Sarasota. And when we're looking at sales, they're down 7.3% year over year. When we take a look at the median sales price, it's down 12.3% from the same time last year. Now that's a big drop. However, to keep in mind that median sales and average sales is looking at the market as a whole. When it comes to actually pricing your own property, we need to do research because not every sub area is the same. Next, we're going to go to the sold to ask ratio, which is sitting at 92.8%. This means that sellers are reducing their prices and more often, and there's a lot more negotiating going on in the sale. If you're a buyer, this is great news because there's lots of opportunities to get a really good deal here. And finally, the last stat I like to look at is months of supply. And for Sarasota, we're looking at 6.6 months of supply for single family homes. What this means is if you list a home at market value, it could take up to over 6 months to get it sold. This is starting to creep into buyer's market territory, and this has been reflected in the fact that the median price has come down. Moving on to Manatee County, which includes Lakewood Ranch, the statistics are a little better. When we look at sales, they're only down 1.9% year over year. When we look at the median price, it is down 8.9% compared to the same time last year. Now, when we look at the sold to ask ratio, it is a little better than Sarasota, sitting at 94.4% of asking price. So again, sellers, if they're not priced right, are reducing, and there is some room for negotiation in these deals. And finally, for Manatee County single-family homes, the month of supply is 5.2 months. That means we're in a balanced market, meaning really well-priced homes are still selling fairly quickly, and that there's some great opportunities out there. Next, let's move on to condos and townhomes in Sarasota, and sales are down 19.1% compared to the same time last year. Now, this trend has been going on all year. The condo market in Sarasota has slowed dramatically. This has a lot to do not only with the interest rates and what's going on with the economy, but the fact that a lot of condo owners are snowbirds, and right now maybe they're a little bit hesitant. We did have a couple of hurricanes and there was a lot of legal issues with condos. However, as those problems tend to dissipate, we should see a rebound in this segment. When we look at the median price, it is down 12.8% compared to the same time last year. A lot of condos are selling in cash, and there are a lot of deals. So if you're an investor, this is a great area to keep an eye on. When we look at the sold to ask ratio, right now condos in Sarasota County are selling at 90% of the original asking price. So big room for negotiation if you're a buyer. And as a seller, if you're not getting showings or you're not getting any offers, you might want to look at further price reductions. And finally, when we look at month supply of inventory, it is currently sitting at 9.2 months supply of inventory, which is definitely a seller's market. It means there's a lot more condos for sale than buyers. So keep that in mind, sellers. If you're selling, be realistic with your price so you can get it sold. Moving on to Manatee County, closed townhouse and condo sales are actually up 0.4% compared to the same time last year. However, when we look at the median sales price, it is down 13.4%. So that's quite a sharp drop. When we look at sold to ask ratio, condos and townhouses in Manatee County are selling for about 93.4% of asking price, meaning there is a lot of negotiation and sellers are being forced to reduce their price to get a sale. And finally, the last stat I want to look at is months supply of inventory. And while it's better than Sarasota at 7.9 months supply, it is in buyer's territory. So the same warning applies. If you have a condo that you're looking to sell in Manatee County, be prepared. It could take a while and you need to be realistic with your price. Across the board, we're seeing less sales, higher inventory, and lower selling prices. Buyers out there are negotiating harder. However, sellers are adjusting their expectations. Later in the video, we're going to look at some trends that are going on in order to determine what might happen in the near future. But for now, let's get into breaking news. Well, what can I say? It's been a crazy few weeks. We've had an escalating conflict in the Middle East. We've had protests all over the country. And let's not forget the never-ending circus that's Washington, D.C. And while we can spend hours going over those stories, I want to zero in on a few headlines that I think are going to have a major impact on real estate in the second half of 2025. First is the so-called Big Beautiful Bill. If you've been following this story, you'll know that this is President Trump's biggest priority.
It's a great bill. It's a popular bill, but we'll get no Democrats only because they don't want to vote for Trump.
Critics of the bill point out that it increases spending, which will lead to more money printing, more inflation, and even more national debt. Proponents, however, argue that the goal is to grow the economy faster than the debt is growing by lowering taxes and strengthening the border, among other things. While I'm personally not a fan of never-ending spending and printing money that doesn't exist, at this time, I'm of the opinion that we need to take a wait-and-see approach. If it doesn't work, voters are going to let everybody know in the 2026 midterms. However, Trump was elected with a strong mandate, and he was quite clear in his campaigning what his plan was. What I will say is that this strategy is going to rely on a few things that all need to come together in order for him to be successful. First are the tariffs. This has been a huge contentious issue with both sides arguing. One side saying, no, if you do this, it's going to cause a recession. And then Trump's side saying that it's time that other countries are going to pay their fair share. So it's been quite contentious. However, when you look at the actual issue, countries are making deals with the U.S. And in fact, the U.S. Treasury is pulling in a lot of additional revenue.
Look how much we've been collecting in revenues. And I did this in part because Wilfred's here and he can talk about the UK trade deal. But just this is the monthly numbers. And they have gone up a lot. June is actually set for another big increase of $27 billion. That is money coming into U.S. coffers from tariffs. We are collecting a lot of revenue. So far, guys, $121 billion.
And this is also the major excuse why the Federal Reserve is refusing to lower interest rates, because it could drive up material costs and put pressures on inflation.
But, Chair, would the Fed have cut more by now if it weren't for the tariffs?
So I think that's right. In effect, we went on hold. As long as the U.S. economy is in solid shape, we think the prudent thing to do is to wait and learn more and see what those effects might be.
So here we are looking at the United States inflation rate chart. For the last 10 years, interest rates were relatively low, sitting around 2% from about 2016 all the way to 2020. Then they dropped significantly during COVID, but then we had that huge spike in 2022, driving inflation rate up well over 8%. So at that time, things were pretty much out of control. The government was printing trillions of dollars in debt, spending a lot of money in areas that they probably shouldn't have. So things were going up in price really fast. Gas was really high. Food was really high. And that's when the Federal Reserve dramatically raised interest rates. And since then, inflation has slowly been coming down, where right now we're sitting just over 2% inflation. The tariffs were brought in April, and now we're in July. And so far, these tariffs have not affected the inflation rate. So having said that, when you see the arguments of Donald Trump putting pressure on Jerome Powell, you can kind of understand his point of view. Now, I'm not saying that interest rates need to go below 3% again. However, if we see rates in the 4 to 5%, I think that's going to make a big difference. While we don't know what the results of the July meeting will be, I'm willing to bet that by the end of this year, Trump gets his way and we see much lower interest rates. So if the economic numbers improve and inflation stays stable, I think that's going to be a real boost for real estate here in Florida. Next, let's talk about a story you might not think would influence real estate here in Florida, but it could, and that's the New York mayoral race. If you haven't been following the news, Zoran Mamdani, I hope I pronounced that right, won the Democrat Party primary in New York. And he is promoting radical socialist ideas that will probably fail and cause economic hardship in the city. However, he seems to be the front runner, so who knows what's going to happen. In fact, recently, Florida Governor Ron DeSantis posted about a spike in interest from New Yorkers considering a move to Florida if the Democratic frontrunner in New York City wins the election. Now, is this political noise? Maybe. Right now, it's all speculation. We'll have to keep an eye on what goes on in the mayoral race. However, this is something to keep an eye on. And finally, here's one that's flying under most people's radar, and that's the Genius Act. This legislation would create a regulatory framework for stable coins, which are cryptocurrencies backed by real-world assets like U.S. Treasuries. But it even gets more real estate specific. On June 25th, 2025, the Federal Housing Finance Agency ordered Fannie Mae and Freddie Mac to explore how cryptocurrencies could be considered as mortgage assets in loan risk assessments without requiring conversion to US dollars. This could reshape the way we buy, finance, and hold property in the very near future. I personally would say that cryptocurrency is one of the most underestimated stories of 2025 and beyond, and I believe that our monetary system is about to go through some fundamental changes. Let's keep an eye on this. So in summary, while there's a lot of yelling and screaming going on out there in the world right now, there are some key stories that could have a real impact on real estate in the second half of this year. And the people that are paying attention could be better positioned to take advantage of these changes in the future. Okay, so for our last segment in this video, I want to take a look at Florida Sun stats to just see what's going on so we might have a better idea of what to expect in the upcoming months. So here we are looking at the statistics for Manatee County. That's where Lakewood Ranch is. This is where I live. However, you can still get a good idea of the surrounding counties also. So on this chart, we're looking at month supply inventory. Now, if you remember from my previous videos, the most important thing with month supply is we're looking at where the trend is going. So right now, as you can see from 2023, we were at a pretty low inventory of just over 2.5 months, where now we're sitting over a 5 months worth of inventory for single family homes. Now, one thing I pointed out in last month's video is that while inventory is high, it is leveling off. The biggest thing to look out is whether that trend continued to go up, leveled off, or started to go down. So while it hasn't gone down yet, it's not going up anymore, which may signal that most of the houses that were being listed have been listed and that we might see conditions start to tighten. Again, if we start to see these inventory numbers go down in the following months, that means that houses are going to start to sell quicker, and we might even see prices start to go up again. And the last stat to look at is the active inventory. And again, you saw the rise. However, it has been slightly going down compared to the previous 2 months. So that's a really good sign. Now, I know it's not a drastic decrease. However, the big thing here is that the trend of going up has stopped. So if it continues to stay level or even start to drop, that's going to signal to me 2 to 3 months down the road, we might be in a much more friendly market towards sellers and that buyers might be competing a little more. So again, if you're a buyer in this market, this is a great time to negotiate a deal. You can also get a lot of incentives. I know builders are offering a lot of incentives. So keep that in mind if you're waiting for something to change. As a buyer, this may be the best market for you. And there you have it. I hope you enjoyed this July 2025 Sarasota and Manatee County real estate market update. The bottom line of this update, the market is still a little slower. However, there could be changes coming in the future. It's all going to depend on what happens in the broader economy. There's a lot of moving parts going on. However, if we keep dialed in, we keep an eye on what's going on, we look at the numbers, there's great opportunities for both buyers and sellers. Looking for a home in Lakewood Ranch, Sarasota, Manatee County, or the surrounding area? Well, you know what to do. Give me a call, send me a message, and we'll get you set up right away. I'm Jeff O'Leary, the Village Guru. Let's get you moving.